I believe investors are waiting and seeing what's going on. Coming out of a quarterly earnings season, you tend to find that there's a lot of headline risk, whether it's Greece, the lack of liquidity that you just referenced, the euro, the strength against the dollar, the weak retail sales numbers. Right. We do have great employment numbers, obviously. There are a lot of positives in the market, so you'll tend to see a lot of sideways trading action.
And I think we're still trying to digest when interest rates are going to rise. I know we've talked about that for a long period of time now, but the thing that's positive about this right now, I think, is that we're going so slow that we're now starting to digest the real impact of a slight raise in interest rates, and I think it's going to be okay.
I think if you look at the pros versus cons here, still support a breakout of this range finally. For starters, this has an international basis. I mentioned this the other day. VGK is breaking out, which is Vanguard's Europe ETF, very broad. EFA, which represents the MSCI EFA index, also breaking out. So when you've got that kind of a backdrop, the All Country World Index as well, it's positive. The other thing, percentage of stocks in the S&P 500 above their 50-day is about to break a new high. It's exactly what you want to see. So I like those aspects of it. On the negative side, you still don't have a new high from New York Stock Exchange advanced decline. Small caps are lagging. Transports are still lagging. But I don't know if you want to wait for all the stars to be aligned.
Well, we know it's the precondition that sets up weakness, which is this in the 13-14 period, the trailing 2 years. It's the single best performing theme or area of the market, with the exception of biotech, virtually doubles. And then it's been rolling over since Friday, November 28th. And there's nothing random about that day. That is the day that OPEC said, we're not going to cut. We're going to see this through to the end. And ever since, the transports dominated by rails and certain truckers, and even the airlines, which should be benefiting from that, have stalled. And the presumption is that this big bullish to bearish reversal, this big topping out formation, has more to run.
I think that's troublesome. And in fact, it is hanging dangerously close to key support. And if it were to get another leg down, then you probably could get at least a mini Dow theory sell signal because of the marked divergence between the S&P or the Dow Industrials and the Dow Transportation.